In this video, I will show you my portfolio for the year 2025 and also for the long run, because I plan to invest on long run, and also the transition that is happening in my portfolio since approximately 6-8 months. And this transition, I will explain you why I decided to do it, why my portfolio started from a dividend portfolio to now a growth value. I don't know how we can call it, like I will call it a value, because at the end of the day, every investor is a value investor. So value portfolio with goal to outperform the market. So here we are on my interactive broker profile dashboard, and we can see that I have two portfolio, one with around $50,000 and the other one $133K. Why I have this is because when I started to invest, I started with a dividend portfolio. Why I choose a dividend portfolio? First of all, because I was in the mindset where I wanted to grow my cash flow, grow my revenue, and there is nothing better for this. At the moment I was thinking than a dividend portfolio. I'm not saying dividend portfolio is not good, but when you start investing, I think it's the best way. And if you want to do stock picking, you're against ETF and so on. In stock picking, I think where you can do the less mistake possible and have the better return for the risk you're taking is a dividend portfolio, because generally if a company is giving a dividend, it's because it's profitable. You don't have a lot of companies that are able to grow their dividend for 10, 15, 20, 30, 50 years in a row without being profitable. So first of all, if the company have a good track record of dividend, it's good. Second thing is with a dividend portfolio, the analysis go way faster and you don't need to spend hours and hours. Also, at this moment, when I started investing on stock market, I didn't have this need or this goal to beat the market. I just wanted to put the cash that I was earning from my business, to put it in stock market, to get more revenue with dividend, to have it somewhere to fight inflation and so on. And because I don't like real estate, so I don't invest in real estate. I don't invest in gold and anything. I just wanted to invest in stock market, and I'm against ETF. So here, dividend strategy was the one that was taking the less time and also the more, let's say, profitable time-wise and for the goal that I had, which wasn't to beat the market. So obviously, I didn't beat the market with this portfolio because it was very defensive portfolio with a lot of utilities company and so on. But I beat the market only 1 year. It was in 2022 when the market crashed minus 19-20%. My portfolio did plus 10%. So kind of cool. But now since 2024, mid of the year approximately, I started a portfolio with the goal to outperform the market on the long run. Why? Because at the end of the day, my goal is to create an investment fund. Okay, this is my goal since many years. At the beginning, I was like, okay, I will create a fund of a dividend portfolio and so on. But let's be honest, nobody cares about the dividend portfolio when you have a fund. What people care and your client care is if you're able to outperform the market. Like, it's where you can earn money. It's where you have big money. So I needed to create this to start having a track record, because if I don't have a track record, it will be difficult to have clients. That's also why I'm doing this channel, because I can have a public track record with the evolution of my portfolio. We'll do every month some video to explain the move on my portfolio and what I'm doing. And like this, I can have some, I will not say proof, but some other thing. I can build an audience and so on. So I'm quietly and calmly moving my cash from the dividend portfolio to the portfolio that have goal to beat the market. So I'm not doing it all in once, because you don't have maximum opportunity all the time. I'm careful on the price that I buy each asset. And also I want to buy a good asset. I don't want to do a stupid mistake by transferring all the cash in one, selling all my assets in my dividend portfolio, because I still have some which can produce some good returns. So I don't want to just stupidly trade them for nothing. Okay, so now let's have a look in what I have in this portfolio here, where I have 50,000, because it's the main one. It's the one where I'm investing now regularly, and it's the one where I'm transferring the money progressively. Okay, so here I use Portseido to track my portfolio. For now, I have 50,000 on this portfolio, and it's since I have it kind of like beat the market for now, but I will be honest, there is a big luck factor here, especially at this moment, because I started investing in it. I will show you the allocation with Chinese stock. I was buying Chinese stock to start this portfolio. When I started to buy JD.com, Anta Sports, and Alibaba Group. Why? So I will go with the smallest one, Alibaba Group. It's because I didn't put a lot because the management is good, but could be better. Okay, they have things to improve, but now they are in the cloud market in China, and it's a huge market. They are well positioned on it, and I think it's one of the best Chinese company for the future. I put it a bit more in JD.com because I really liked how the company is managed, and I really like also the fact that they are really client focused and they have very good logistic implementation in China, and they start to have in Asia. They're able to deliver faster and have a better quality product. You know how in Asia you can have shitty quality product. JD.com really try to be better in this, to be better than everybody. That's also why I didn't invest in Pinduoduo, for example, because with Temu and so on, I don't find it very, very good. Maybe I'm missing some points. I don't know, but that the point is I preferred like JD.com. And the third company is Anta Sports product, which is brands of sportswear. And it's not just one brand. You have Anta, which is the main one. And you have they own other brands like Arc'teryx, Salomon. They own also Rossignol, Head, Wilson for tennis. They have a big panel of brands. They also have Fila, okay, the brand Fila. And thanks to this, for me, they kind of have some proof like that they are able to, first of all, do good acquisition and create very good shareholder value. Maybe I can do a full analysis on Anta Sport on this channel. I will probably do it. Let me know in the comment section if it's something you would like, because they have proven to be a very good team. Forbes gives the award of the CEO of this company in 2024-2023 that it was the best CEO of the year in China, because they are very, very good in acquisition. And also Anta Sport is like a big brand. Of course, Nike still have better performance. Nike is still like better in the eyes of Chinese people and so on. But Anta is really, really growing. They are in a promising market in China, because now more people mostly wear like suits, shirts, and so on, and go more and more in the sportswear area. And they are very well placed in this, in China and in Asia. Okay. Another company that I have is Novo Nordisk. I have the stock not from the ADR in America, but the one from Copenhagen. I have a full video on the channel that you can find a full analysis of this stock. So I will not repeat myself, but a great business, good price now, like really good quality, focus on diabetes. So the company is really, really good. The management is really good. The numbers are very good. And I think now when I bought it, it's kind of a fair price to buy it. Then I have Evolution AB. Evolution AB is in the gambling industry, online gambling, online casino. And they have a B2B business. So they don't sell online casinos, they sell to the companies that own online casino, studio games for this casino, and they have a very, very good team doing good acquisition, growing good fast, and also having like low debt, good return for shareholders. It's just that since few years the stock have been totally destroyed because of some regulation problem, also some strikes in Georgia, something scary for the shareholders that they will not be able to implement correctly in United States, and it will decrease margin. So plenty of problems that I think doesn't affect the business on the long run. So I think Evolution AB, it's a very good company at a very good price, and I think they should be able to give good returns on the long run. Like, okay, maybe not for the next 2 months, but for the next 3 to 5 years, I think they can give great results. Then I have Amazon. Okay, Amazon is newly in my portfolio, simply because, first of all, I love Amazon. I'm this type of person that when I can buy something directly from the brand, I will first go to check if Amazon has it and buy it from Amazon instead of buying from the brand. For example, if I buy an iPhone, I will buy the iPhone on Amazon and not on apple.com. I don't know why, because I know why, because I know that they are doing great for the client. They have a great client satisfaction, and they always make sure that everything is good for you. So I really appreciate this. They really have this incarnation of client is king, and this is very valuable in my opinion. But now the real reason is mostly because of AWS, which is incredible business. They are the leader in probably one of the biggest market possible for the next 5, 10, 20 years, which is the cloud market, the data center market. And Amazon is the leader of this market, well positioned. Like they totally disrupt this market while arriving. And I'm preparing a full video, full analysis of this stock. So remember to subscribe to not miss this full analysis on Amazon, which is, yes, the price is a bit high, but it's not, for me, totally overvalued. It's not overvalued. I think it's kind of a fair price for this company, especially when we see the future that it can have, the growth that it can have, and also the fact that it's more difficult to evaluate this company. So I think you can have an edge if you deep dive into the company and understand the business. And the last one in my portfolio is Alphabet, Google. I could buy it around $150 last year. So I'd seize the opportunity and I bought it. Same, great business. They are third in the cloud business, so they are well positioned. They have high margin, like I'm using YouTube every day, I'm using Google service every day. I think we don't really need to present this company. They have great potential return for the next years. And I think like they are very innovative, and luckily last year, they needed some time before exploding and go up because they needed more. The AI was not convincing, but I think today Google and Amazon are probably two of the companies, that maybe Meta as well, that can have the best AI possible and the best AI models, because Google is getting so many data from customers with all the Google network and so on, but also from company with Google Cloud, with the data center and the business suite and so on. So Google is a great business. I think was fairly valued. I think today is still a value which is kind of fine, but when I bought it, for me, it was really undervalued. So that's why it's in my portfolio. When it comes to cost, my biggest position with cost allocation is Amazon, then Evolution AB, and then Google for now. I will see in the next month what I will increase, where I will buy, and so on. But the portfolio will be kind of concentrated, because if you want to beat the market on the long run, you cannot have like 50 companies in your portfolio. I want to focus on 10, maybe 15 companies and really know them like very, very well. So this is how I plan to do this. And I will, of course, share everything with you on this YouTube channel. If you like the video, remember to put a thumbs up, and I will see you in a next video. Bye.